amount. Yeah, the mic. Yeah. Okay, thank you.
Okay. We are happy to get 1% or 1.5% growth in Germany. We call this recovery, and you have here growth rates of 7, 8, 9%. So good luck with the further progress. Can you help me with my PowerPoint? Thank you very much. Now, we as Oil World, ISTA, International Statistical Agrar Information, we are doing this since 1958, observing the world market, looking at supply and demand, and forecasting prices. We are actually the company which create the world totals. We have about 600 sources all over the world, and we collect numbers. We analyze all the individual countries, and okay, yeah. So we are lucky we found it. So we analyze all the countries, and we create, at the end of the day, we create the world totals. And of course, if we can help you with your requests, with your data requests, then please let me know. I will be happy to do so. We are producing daily, weekly, monthly publications. One of the latest monthly publications is with me, and I have a few copies which you can take if you want and take them home. But you can get more if you get in contact. Now the topic for today is global market. And I want to discuss with you supply and demand fundamentals. This is a fascinating market. And I want to share some of my insights, and I would like to also try to forecast prices at the end. Where do we stand, and what is the situation? Now, I'm going to look at palm oil and how palm oil is linked to the oils and fats and oil meal sectors. That's very important, because a crusher has to sell the oil and the meal. And with the biodiesel dynamics having lost momentum, the oil prices have come under pressure over the past 12 months, and the meal, the soybean meal, the rapeseed meal, the fish meal, the meals had to carry a larger share of the crush value. So meal have been supported while oil has come under pressure. And in between the seed prices have been very well supported, because we had a shortage in soybeans on the global market, a real shortage. And this boosted the meal prices to record levels over the past couple of months. And you and your livestock producers suffered from this also here. But the oil, despite the tightness in the soybeans of the world market, the oil came under pressure. And that's quite interesting. And how is this going to develop? And this is what I would like to discuss with you. Now, first of all, palm oil has become the most important vegetable oil worldwide, very clearly. And you just look at the slide, you see that palm oil production worldwide has more than quadrupled over the past 20 years, from 14 million back in the early 90s to 58 million tons next season. What a jump! And it is a reliable source of supply. Over the past 20 years, world palm oil production never declined, contrary to soybean oil, rapeseed oil, sunflower oil. It's a constant increase. That's important. And it has become an oil which has been available most of the time at considerable price discounts. Just look at this, where world consumption over the past 20 years has doubled. World consumption of all oils and fats has doubled over the past 20 years. This is quite alarming. Can the world continue to support this rate of increase also in the future? And within the oils and fats, it's the palm oil and palm kernel oil which has shown growth rates which were more than double the growth rates of other oils and fats. And today, worldwide, palm oil accounts for both oils, palm oil and palm kernel oil account for 33% of world production and consumption and 63% of exports. Now the oil seeds, and we have to understand the oil seeds, and I want to invite you to also try to understand the global market. It's a fascinating market. Try to understand it and develop your own price conclusions out of it. The oilseed production, the red line, the oilseed production also doubled or more than doubled over the past 25 years. And again, the same question has to be raised. Can the world continue this rapid growth? If you look at China, if you look at India, far from being satisfied. If you look at Vietnam, if you look at Myanmar, in this area where a lot of uncovered demand is there, which needs to be satisfied. Can we continue this? Big question mark, because acreage is getting scarce. Acreage is getting difficult to find. And no wonder land values have more than doubled and in many cases trebled over the past 10 years. And this is one of the reasons why palm oil prices have a bottom, probably at around 2,000 or 1,900 ringgit, simply because of production costs. In some Malaysian areas, Sabah, smallholder production costs are probably close to 1,800 or 1,700. Yeah. So can we continue this growth? Can we continue to raise yields per hectare sufficiently to create the production the world market needs? And this is the distribution. Soybeans, the biggest oilseed by far, and of course rapeseed, sunflower seed also growing, and the other oilseeds are relatively small. Soybeans, the driver in the oilseed market, and soybean meal, the dominant meal in the protein sector. Soybeans is key. Soybeans is also key for the palm oil prices. So what happens in soybean oil will determine the future outlook of palm oil to a certain extent. Now we see US production stagnating. Difficulty to expand soybean production in the US because of competition from corn. So South America has to take over. And you clearly see in the red line here what happened in Argentina, Brazil, Paraguay. You can include Uruguay and Bolivia. Very strong increase, but with question marks. Just to mention infrastructure bottlenecks. We have a very big soybean crop on paper at the moment, but it cannot be moved in the way the world market needs it because of infrastructure deficiencies. Or, in the case of Argentina, the farmer is not selling because the prices have declined, particularly in his local currency, because of the exchange rate, which is artificially kept at a very low level, about 60% below its real value. So the farmer is not selling. And investment companies in Argentina at the moment, they start to cancel land contracts. They start to cancel land contracts because they are fed up, or what do you say, pissed off with the government. Because the government punishing them in Argentina with an export tax of 35%. So they just say, no, we don't want this. And there is the risk that Argentine soybean plantings will decline for the crop in 2014. This is something we should keep in mind if the world's largest exporter of soybean meal and the world's largest exporter of soybean oil stops expanding, the world is in trouble. Because the US has become a net importer of oils and fats because of its biodiesel, biofuel program. So a lot of challenges in the soybean market. The global market in oilseeds was relatively tight, and as a result of that, production of soybean oil declined. But in contrast, palm oil, and you can see the annual changes in palm oil production in red, palm oil was a reliable source of supply. And if you look at the current season, 2012-13, world production of palm oil jumped by 3.5 million tons, while soybean oil was down, and while all other oils and fats, production of all other oils and fats declined by 1.9 million tons. So palm oil saved the world in a way by providing 3.5 million tons more in the current season. We expect some slowing down next season, but a recovery in soybean oil, in sunflower oil, in olive oil. We look into the next season to be most likely a rather bearish season, with prices of oil falling to a 4-year low. This is what we expect, and I come to this at the end again. Consumption, a similar story as with meal, and a similar story as with oil. World consumption has been very strong, rising from 74 million tons in the late 80s to 194 next season. What a jump! And over the past 10 years, consumption increased by 63 million tons, more than 6 million tons per annum. Biofuels, population growth, rising income, and rising capita consumption. So drivers for the oil consumption. Primarily countries like China and India were the drivers, mainly for food. But a slowing down occurred in the middle of last year, and a slowing down started in biodiesel demand. And this has been a major change in the oils and fats market, and most likely world consumption of oils and fats for biodiesel only stagnated in the most recent 12 months. A big change. And this has made the oil market so bearish relative to the meal. A trend which we expect to continue more or less in the next 12 months. You see here in green the portion of biodiesel, or the portion of oils and fats used for biodiesel. This is a small, looks to be a small portion, but actually it's a big number. It's 23 million tons. This is a large quantity. And prices are often moved by a shortage of a few 100,000 tons. And you know, a relatively small percentage change can have a major impact on price changes. So 23 million tons is a big number, and you know, a slowing down of the growth in biofuel or a stagnation of biodiesel production had a major impact on prices, pulling them down. Yeah? This is the summary of biodiesel production. Big jump over the past 8 years, and now dynamics become weaker. Growth dynamics become weaker. Mandates have been frozen. No further increase in the European Union. So this changes the fundamentals. Oils and fats outlook. Our forecast for next season: palm oil 30% market share, palm kernel oil 3%, and palm oil by far the biggest oil worldwide. Now, when it comes to price forecasting, we compare annual changes of production, which is summarized in yellow, with the annual changes of demand, which is in green. Now, in the current season, 12-13, world production showed only a minimal increase of less than 2 million tons because of the shortfall in soybean oil, in sunflower oil, in olive oil, a little bit in groundnut oil and cotton oil, despite the boost of 3.5 million tons in palm oil. This was an exceptionally bullish supply development. Only less than 2 million ton growth here in the oil production. But this was largely offset by record stocks at the start of the season and a slowing down of demand. And the demand fundamentals became very bearish. And the net result actually was that prices declined because stocks of a commodity like palm oil continued to rise to record levels until the end of December. Now we are in a transition, but this is interesting to see that we had a bullish supply fundamentals offset by bearish demand fundamentals. Stocks have started to move down in January, June 2013, but they are still ample. So there is no reason to get concerned at the moment because of low stocks, particularly because we are going to see bumper oilseed crops coming around the corner for soybeans as well as for sunflower seed and also rapeseed. Stocks usage ratio is declining. So we have to be careful and we have to watch what's going to happen. Don't forget, the challenge is to provide 194 million tons of oils and fats to the global market. This is a lot every month and every week. So we are looking eagerly what happens to the palm oil production every month in Malaysia and Indonesia. June was again a poor month. If the July palm oil production in Malaysia does not pick up, we may have to change our price forecast a little bit. Yeah? So it's a very sensitive thing because stocks are only 12% of annual consumption. This is not very big if you consider that there are strategic stocks in the world. A country like China has built strategic stocks. India has built strategic stocks. Iran has built a lot of strategic stocks. There may be a reason for it. At least for India and China. A typical example of a developing country which is getting richer, they also build storage. They do not want to be dependent on the world market on a short-term basis. They want to have reserves. The US no longer is the reserve pool in the world. No, it's the importing countries. So we have to be careful. Stocks are still high, but they are not so high if you reduce the reserve stocks and the strategic stocks in several of the importing countries. And if we just look at the exporting countries, if you look at Malaysia, if you look at South America, stocks at the moment are not really big. Yeah? So we have to be careful. The prices can change quickly, and you should not, if you are a consumer, you should not wait too long with your buying. Yeah? Don't be short for a too long period. Now, to wind up, this is a nice slide because this is so exceptional, showing palm oil production doubling every 10 years. I think this is without precedent. And it was, of course, easy in the beginning, but it even doubled most recently and continued to grow fast in the past 2 years. And on top of that, and I think we heard this already this morning, but just to remember, oops, what was this? Just to remember, 54 million tons in 2012, plus 6 million tons palm kernel oil, being produced on just 6% of the area, accounting for 32% of world production in the year 2012, on 6% of the world area, because of high yields. And palm oil is just a very special crop. And in 2020, we think the world needs 78 million tons, more or less. That's a big challenge to reach. And there's a lot of homework that has to be done in Southeast Asia when it comes to yield improvements, when it comes to issues like labor shortages, when it comes to replanting. There is a lot of challenges down the road which need to be fulfilled, and we need more plantings. Yeah? Although the current haze and the illegal burning really does not help. It must be in a sustainable way, otherwise palm oil will not be accepted by consumers. Now this is a trend in Malaysia and Indonesia. Indonesia, of course, as you know, has overtaken Malaysia. It looks like a linear development. It's not. And it is these small changes where the year-on-year growth varies between 1 million tons in Indonesia and 2.8 million tons. These changes make the price. Yeah? Malaysia's difficulties in expanding, acreage expansion slow, yield expansion also slow, unfortunately, but expanding and rising, as I said before. Rest of the world, outside Malaysia and Indonesia, 8.5 million tons. And as I said before, annual increases, summarized here, annual increases, palm always recorded year-on-year increases of at least 1.5 million tons, and in one case even 5 million tons. If it's 5 million, of course you have a bearish impact. Now there is something in palm which I want to add briefly. You can't stop palm oil from producing. palm oil production cannot be linked to the demand. It has to be done like a milk cow. So the residual supplier would be the crusher, the oilseed crusher, the rapeseed crusher, the soybean crusher, the sunflower seed crusher. Price attractiveness. To come to an end slowly. What is the situation? Now we discussed the Malaysian prices already. I am of the opinion that we have seen the lows in November or December. I think it was December. I look here at Rotterdam. Rotterdam prices. Palm oil established a price low of $770 in December. In Rotterdam, I think this has been the low, ending the price cycle of palm oil after 48 months. This most recent low was much above the preceding cycles. But vegetable oil prices very clearly moved to a higher plateau. The lows are getting higher and the highs are getting higher. Prices are moving upward, and part of that is linked to bioenergy, part of that is linked to higher land prices in particular and to higher production costs in general. Now, why do I think that palm oil prices have reached a low for the time being? And there's one major argument. If palm oil prices had continued to fall in January, March, it would have attracted too much demand from the energy sector. There is, of course, the link. But when we look at our statistics, at the monthly statistics, the palm oil consumption went so sharply higher in January or October, May, that stocks were considerably reduced. And if prices had not moved higher, the drain on stocks would have been greater. Energy markets, crude mineral oil prices, they constitute a floor for vegetable oil prices. They constitute a floor for palm oil prices. Palm oil prices can move only, and this is Brent oil, palm oil prices in Europe. Palm oil prices can move only below crude mineral for a very short period of time. But it creates a floor. However, the key question is what we are asking ourselves: what is going to be the premium? And the premium can be quite high. And this decides about your profit or loss, to predict the premium of palm oil. And this is why we do our fundamental research, and we have to look at the global supply and demand fundamentals of this whole sector to try to find an answer what the premium is, what palm oil and soybean oil has relative to mineral oil prices. Now for soybean oil, quite interesting. Palm oil has stabilized and increased slightly. Look at the blue line. While soybean oil prices continue to plummet, even the past 5 days. Prices in Argentine prices went to almost record discounts relative to US soybean oil, and the premium to palm oil has narrowed to $140. We just have a lot of soybean oil coming out of Argentina at the moment. Yeah? Coconut oil prices, very briefly, very interesting commodity. Coconut oil was at a discount to palm oil for a quite long period of time, from October until March or so. And in this period, and the same was for palm kernel oil, the lauric oil prices were at a discount to palm oil. it took quite long, but finally we saw that many consumers, like China, India, in Europe, and elsewhere, they partly replaced palm oil with lower priced Nordic oils for the food industry. And this has wiped away the surplus in palm kernel oil and the surplus in coconut oil. And you see coconut oil prices, the red line, going sharply higher by $150 over the past 2 months. This shows you how consumer reaction can rapidly change supply-demand fundamentals and price. So, always be careful. Rising dependence on palm. That is one of the headlines of today. And you can see this clearly, how the world market has become increasingly dependent on palm oil exports, now accounting for 63% palm oil and palm kernel oil relative to all oils and fats. While soybean oil, rapeseed oil, and sunflower oil combined are declining in the current season. See, soybean oil, a downtrend because of biodiesel production in the US and South America. Downtrend in soya, sharp uptrend in palm. And I think this is a trend which is going to continue very clearly. It is basically on 2 countries. Yeah? It's Malaysia and Indonesia. Now, a final graph here on the stocks. The stocks usage ratio, stocks relative to consumption. The stocks usage ratio in palm oil is declining. And this is probably the most interesting change in the past 6 months. We have seen, in January, June, we have seen world stocks, or put it another way, we have seen Malaysian and Indonesian palm oil stocks to decline by 1.6 to 1.8 million tons from December until the end of June this year. So production production was too small. Part of that was the surprisingly small Malaysian production in April-June. And demand, export demand, sizably exceeded production. Also domestic consumption increased in Indonesia. So this was a major setback in stocks. Palm oil stocks at the moment are no longer burdensome. We are at the beginning of the new seasonal increase in production, and we have to observe how quickly this goes. Normally, upward potential in palm oil prices should be very limited, and this is why I fully agree with Benny's observation. We are seeing a sideways, most likely seeing a sideways market. Downward potential will be limited, but also upward potential is limited by the now seasonally, most likely seasonally increasing production of palm oil and the forthcoming increase in Northern Hemisphere oilseed production. In conclusion, first, the global dependence on palm oil will continue to rise. Palm oil will continue to be the choice of preference of most importing countries, also here, because of price advantage. Palm oil has competitive advantages, needs less area, higher yields, lower production costs. Higher investments, and this is important, higher investments and more efforts, however, are necessary in the producing countries to create the supplies required in the future. And this has to be done in a sustainable way. Very clearly, it has been in a sustainable way. Now the price outlook, the price outlook in my opinion is bearish. First of all because oilseed prices are going to come under pressure. This is the summary of our latest forecast. Production 21 million tons higher, plus higher opening stocks. We're going to have 27 million tons more oilseeds next season. This is bearish. Production is rising almost everywhere with the major exception of China. But India probably is underestimated. Their plantings at the moment, Kharif crop plantings, are excellent at the moment. They are much ahead of normal and weather conditions have been favorable. If weather stays favorable, also India will add to the bearish scenario. But China is an exception. Chinese production will continue to fall to a 10-year low or probably less, and this will keep Chinese import requirements very high, going through the roof here. Oilseed imports, probably another 8 to 9 million ton increase in Chinese oilseed imports to or above 70 million tons next season. This is going to be a bullish factor which we should keep in mind. Also Chinese oil imports, mainly palm oil, has been rising and this trend should continue. For oils, for the major oils, I expect prices to fall to a 4-year low. The price setback in palm for the full year July, June 13, 14 will be very limited, just a few percentage points, more downward potential probably in the first half of the season, July, December, but there is a possibility of some recovery in 2014, but still the full year should be down. Also, downward pressure as shown in the slide here, quite considerable downward pressure for the full season in the 3 other seed oils, which is soybean oil, sunflower oil and rapeseed oil. So thank you for listening, and if I can be of assistance to you from Germany, please feel free and contact me via email or phone. Thank you very much.